Hello traders, Day Trader Matt here of businesswithtrading.com, and today I wanted to highlight a trade that we made a couple months back on IWM, or the Russell ETF. And looking at it, this green area is where we ended up entering the position, this red area is where we exited the position, and I wanted to look at what price was doing prior to our entry, so that way you get a little bit of an idea of why we made the trade, a little bit of insight into the madness of my brain, I guess. So anyway, if we look at IWM, this is the 10th of May here. Our entry was the 23rd of June, so that gives us a little bit of time to look at. And price was basically going sideways to lower here, and then it finally bought up at this point and started to move higher. So watching that, moving higher, it's a big down day, but then it keeps moving up. After it reaches a certain point, you see price start to drop, and then it starts to get a little bit more erratic and move sideways to slightly higher. And that's when I really started looking at it as a trade, and I knew I wanted to be short. I did not know it was going to drop in one day, but when that does happen, it's really cool because that does not happen very often. So when it does, it's a great time. So anyway, let's put an arrow. This is our original short area. We grabbed the 116, 112 put spread, paid $1.13, so it was a debit spread, and we ended up exiting right in this region here, and that gave us a profit of $2.17, which is a nice profit. And seeing that it was about 24 hours it took us to make that profit, it's pretty outstanding. So that gave us $1.04 altogether, which equated to a 92% gain in a 24-hour period. So that was actually pretty phenomenal. And if we look at this, we see it very erratic. And in the market ETFs, selling credit spreads usually are not the best option. Here, we were able to grab a put spread for $1.13, which is very, very small. That kept our risk pretty tight. And, to me, it had a high probability of rolling over. Now, I thought the rollover would have taken a little bit more time, but in this case, it just rolled over very, very quickly. And as you can see, we could have actually taken a little bit more profit. And leaving profit on the table, to me, it really does not matter. You get into the trade, keep your risk very, very tight, and you try to make as much money as possible. This gave us a 92% gain. We could have had a little over 100%, but, the same hand, it doesn't really matter. In the grand scheme of things, if you're making more than you're losing, you're doing a good job. But, on the same hand, you have to be making more than you're losing as part of your plan. Like, if you're just making more than you're losing, there's no plan, it's just something that's happening, that's horrible, because that's teaching you really, really bad money management skills. Because when the market gets more difficult, it's going to be hard. Just like in the 2000 tech bubble, if you guys were around trading it at the time, if not, you've probably heard a lot of stories about it. You could pretty much throw a dart at a dartboard of stocks, pick one, make money. It was easy. But after 2000, after the bubble burst, it became very, very difficult. So a lot of people that made money during that time lost all of it. You've probably heard a lot of stories like that. And if you haven't, Google it, and you'll probably learn something about it. I thought it was a neat time just because there's a lot of lessons to be learned from something like that. And, it kind of made me think of it whenever I was talking about this trade. So hopefully gained a little bit of insight. That's always a good thing. Any comments, questions, you can always leave them below. If you'd rather email me directly, support@abusinesswithtrading.com. Have an awesome rest of your day. I'll see you back here in the markets. Thank you.